Here's Chief Correspondent David Faber.
Good evening, and welcome to the March edition of Business Nation. If a devastating act of nature destroyed your home, would your insurance company pay to rebuild it? If you have a homeowner's policy, you'd probably think so. But like a lot of people have learned, you might very well be wrong. Even after the devastation of the California wildfires and record damage from Hurricane Katrina, insurance companies are reeling in record profits. And as Scott Cohn reports, some critics believe they're doing that by cutting back on coverage, leaving some homeowners in the lurch.
As we approached and started heading into the San Diego area, you could just see a gray fire cloud, a gray ash debris cloud that was unlike anything that I had seen ever.
Attorney Karen Remus tried to outrace the wildfire that devastated her San Diego neighborhood in 2003, but she got there too late.
It looked like a nuclear bomb had gone off. It's what I would fathom Armageddon would look like, because it was just every home completely down to the ground and just black and sooty, and there's smoke in the air, and it looked like maybe you were walking into hell.
But Remus says a different sort of hell soon followed, dealing with her insurance company. Even though she thought her brand new house was fully insured, the company's offer of what it would actually pay for, called the scope of loss, left her stunned.
There were things that were missing. Like, one thing we noticed was like there were no architect fees, and I'm like, call me crazy, but I think we might need a set of blueprints to build a house.
So it was clearly obvious to you that this scope of loss, this list, was not reality.
It was a lowball scope, and it was a lowball offer. And that's when my husband and I looked at each other and we said, clearly, this is where the gloves are coming off.
Remus went head-to-head with Liberty Mutual, her insurance company. The two came to an undisclosed settlement, and Liberty Mutual wouldn't comment on the case.
These insurance companies are businesses. They're there to make a profit. You would expect them to negotiate a little bit.
I am going to have to beg to disagree with you there. And I don't think there's a negotiation over policy coverage that I paid for. I paid for that coverage. They were very happy to take my check.
Farmers Insurance is all about getting things back to normal.
This is how insurance companies want you to see them.
Like a good neighbor.
Friendly neighbors, there to protect you, to help you in your time of need.
Providing the best service under the worst of conditions.
But more and more homeowners are finding themselves doing battle with their friendly insurance company to get the money they say they're due.
Things have changed in the past, I would say 3 to 5 years, a great deal in the insurance industry.
Joanne Katzman has worked in the insurance industry for more than 20 years.
In some cases, they'll offer such a lowball figure that you cannot repair the job adequately for what they're offering you. And that's just wrong.
Katzman now works as a public adjuster, someone who represents the homeowner after a loss. She says insurance companies routinely use the computer programs which are supposed to calculate replacement costs to lowball clients instead.
They price content, structure, cleaning, whatever you may need for a house you can get out of this program. However, you can override any price in the program. I'll get estimates from various companies where for paint or drywall the prices will be a nickel or a dime off. And that may not sound like much, but when you're looking at, the square footage of a room, that adds up very quickly.
Well, it's a competitive industry, and obviously if you collect premium and don't pay claims, you make more money. And that's a pretty simple math.
Sandy Prager is the president of the National Association of Insurance Commissioners and the state insurance commissioner in Kansas. She agreed to meet us in Greensburg. The town of 1,500 was wiped out by a tornado like this one last year and became a symbol for critics of the problems with homeowners insurance.
Most of the companies here in Greensburg paid policy limits, but if there's an opportunity for any kind of an adjustment to benefit the company, I think they will try that first.
Which is exactly what they did with John Stoltenberg. He rode out the tornado in his neighbor's basement, then emerged into disaster.
What did you see?
Oh, just a lot of chaos. People walking around with a blank stare on their face. And then the farther into town I got, I would have to literally stop and look where I get some sort of direction, because All the landmarks were gone.
How badly was your house damaged?
It was going to take a whole new roof, all new siding. Some of the walls were not square anymore. You could tell in the foundation it had shifted. It sat on a concrete foundation. The blocks were cracked.
His insurer offered him $22,000.
I'm not a contractor, but I kind of have an idea what building materials cost, and $22,000 would just cover the cosmetic damage.
Stoltenberg contacted Commissioner Prager, who got the company to pay $80,000, the full value of his policy. She says she's been getting so many complaints about homeowners insurance lately, she's had to add staff.
We had an issue here in Greensburg with one of our companies saying that you have one wall standing, that they didn't have to pay policy limits, that you would rebuild around that one wall. We did not allow them to use that kind of an argument.
Is there something inherently wrong here?
Well, I think what we see more and more of is companies trying to avoid risk and to maximize profits, and they're in the business to make profits. So that's there's nothing criminally wrong with that. But I wish we could get back to a philosophy of insurance being managing risk and not just trying to avoid risk.
To understand why the industry changed, you need to look back to 1992. That's when Hurricane Andrew slammed into South Florida and completely shook up the industry. Insurance companies lost $12 billion that year, and they couldn't afford to let that happen again. So they hired consultants, bought reinsurance to cover their own losses, and they began cracking down on their own customers.
Some things they're doing are legitimate. They're buying more reinsurance, but some of them are not so legitimate.
The insurance industry was genuine.